In the last 3 months, the dynamics of inflation in the United States have been marked with uncertainty. In addition, high interest rates are currently acting as a headwind for the domestic economy. On the other hand, prices in the country are still far from the target of 2%, and the labor market is not cooling as quickly as analysts had predicted. Therefore, the Fed Reserve may need much more time before the rate cuts can be introduced in the United States. This was the message in the speech by San Francisco Federal Reserve Bank President Mary Daly. Besides, other Fed policymakers made comments on Friday, including the presidents of the Fed Reserve Banks of Chicago, Minneapolis, and Dallas. But given that Fed Chairman Jerome Powell is expected to speak next week, and the market reaction to the numerous speeches of his colleagues turned out to be muted. We provide more details about upcoming events as well as the possible impact on asset movements in the traders calendar, which is published on Friday and Wednesday. Yesterday, the US Labor Department released a weekly update on unemployment claims. Initial jobless claims went up stronger than expected last week and forced the dollar to give way to the pound sterling and the euro. A cooling labor market in the US increases the chances of the Fed rate cuts this year. However, today, in the light of numerous opinions from the Fed's policymakers, the US dollar is still trying to find catalysts for growth. Despite strong volatility, its index is still moving up within the range of 105.20 to 105.40. Interestingly, US stock indexes are also growing. The Dow Jones, for example, closed with gains yesterday for the seventh session in a row. And the S&P 500 index is also closing higher for the third week in a row. Its intraday candle today is between 5,180 and 5,215. Since its recent low on May 1, the index has already gained a solid 3.9%. While the US Central Bank is talking about the possible rate cut at the end of the year, their colleagues from Europe signaled June as the beginning of a monetary policy easing. Indeed, the minutes of the recent policy meeting of the Eurozone's regulator emphasized that by June, it's still necessary to figure out how the economy is doing. ECB policymakers want to evaluate how fragile the process of disinflation looks. The euro-dollar pair remains today between the levels of 1.0770 to 1.0800, and the euro once again took the opportunity to regain its footing in the light of the weak economic data on the other side of the Atlantic. However, analysts doubt the ability of the euro to maintain strong bullish momentum. After all, the whole game is still centered around the scenario of rate cuts. In this context, the US dollar is an absolute winner, but as the euro dollar pair looks for a catalyst that could suggest a particular direction, any economic reports that deviate from forecasts will impact the instrument. Interestingly, today trading is not unfolding according to market rules. That's where assets usually show correlation, we are not seeing it now. The US dollar is growing, so is the euro stock markets are going up, but at the same time, oil is also growing. Usually, when the US dollar strengthens, Wall Street and the oil prices should fall. Why did the correlation break? What trends have changed the usual course of things? Most likely, this is due to contradictory statistics and numerous comments from the United States financial policymakers. As for oil prices, today they also responded to changes in the joint policy statement by OPEC and its allies. Such a statement unveils broader forecasts that include both cartel countries and non-cartel oil exporters. The largest of them is Russia, and oil prices found support in particular from the data on a decrease in the United States oil inventories. Commercial oil stocks in the United States shrank by 1.361 million barrels last week. In addition to dwindling geopolitical events are contributing to the rise of the oil market. Besides, the prospects of easing monetary policy in the United States, according to the forecast, should stimulate growth in the global economy in general and demand for energy in particular. Therefore, Brent has already jumped by 1.7% this week. And today the Brent price is sticking to the upper border of the intraday corridor between $83.90 and $84.50 per barrel. You have watched the market review by InstaForex analysts for Friday, May 10. Subscribe to InstaForex TV channel and we keep you updated on all market developments. Feel free to ask any questions and comments. And we wish you have a nice weekend and see you online on a Monday.